The Monetary Policy Committee is the highest policy-making committee of the bank with the mandate to review economic and financial conditions in the economy, determine appropriate stance of policy in the short to medium term, review regularly the Cbn monetary policy framework, and adopt changes when necessary. They also communicate monetary and financial policy decisions effectively to the public and ensure the credibility of the model of transmission mechanisms of monetary policies. During the first Monetary Policy Committee meeting this year, the committee urged the Central Bank of Nigeria to increase its lending to the government via ways and means, as it believes it will help relate the economy from recession. According to the report, the committee considered the broad-based global stimulus packages introduced by the apex banks of different countries to support the economic recovery in the face of COVID-19 pandemic. Some of the stimulus packages noted by the MPC include the expanded credit lines, asset purchase program, corporate bond purchase, additional funding facilities for the financial system, special central bank lending, and increase in ways and means limits. In order to improve revenue, the MPC also called on the government to take advantage of the takeoff of the African Continental Free Trade Area, as it believes it could boost economic production and generate sizable revenues for the government.
The price of crude went down, and we sneezed. We sneezed because revenue came down. When revenue came down, government became incapable to finance all its obligation. If government cannot finance all its obligation, I think it will be irresponsible on the part of the Central Bank of Nigeria as a lender of last resort not to support the federal government. People have doubts about the efficacy, whether with the second variant or the various variants going through different countries, whether even the vaccines will be efficacious. Not only has that health crisis resulted in terrible fatalities, the same health crisis has dovetailed to global economic crisis. Global economic crisis where, ladies and gentlemen, the price of crude came down in February, March, or April 2020 to as low as $17 a barrel, where even our cost of production became even higher than our revenue. Let me say that these crises are of a global dimension, and as a result, Central Bank of Nigeria is not alone in providing support to a government. And I'll give you a few examples. Advanced and emerging market economies have implemented both conventional and unconventional monetary measures aimed at curtailing the spread of the virus and stimulating greater economic recovery. In the US, for instance, over $7 trillion of funds is projected to have been spent in 2020 alone. The total balance sheet of the US Fed, that is US Central Bank, has increased from $4.1 trillion to $7.4 trillion over the past year as part of its asset purchase.
During the second meeting, which is the 278th edition, the Monetary Policy Committee of the Central Bank of Nigeria voted to retain the monetary policy rate at 11.50%. This, which was disclosed by Governor of the Central Bank of Nigeria, Godwin Emefiele, while reading the communique at the end of the meeting on Tuesday, 23rd March 2021. Some of the highlights of the committee decision includes the asymmetric corridor of plus 100 and minus 700 basis points around the MPR. CRR was retained at 27.5%, while liquidity ratio was also kept at 30%. The members of the committee voted to host the parameters constant, having had a consensus that Nigeria's inflation is substantially a supply-side phenomenon, hence the need to continue to focus on consolidation of the recovery process. According to the communique released by the apex bank, the actions that will consolidate the recovery process include stimulating output growth, create employment, while also putting effort to moderate the inflationary pressure. In terms of funding, the committee noted that the bank has disbursed funds under its various agricultural intervention towards improving food supply in Nigeria. The committee noted that the disbursement of 107.60 billion naira to 548,109 farmers cultivating 3,619 hectares of land between Q4 2020 and Q1 2021 to boost dry season output in support of agricultural value chain development. The CBN's move to retain the benchmark interest rate at 11.50% indicates the bank's continued effort to stimulate the economy by improving access to loans whilst hoping to increase productivity.
Well, let me say that we are doing everything possible to put in place policies that benefit all Nigerians. All Nigerians. And CBN is very conscious of the fact that our youth population of between, I repeat, 18 to about 40-45 constitute close to 60% of our population. And we are doing everything possible to ensure that we take them into account in all our policy decisions. The level of unemployment is regrettable, but I'm saying everything is being done. And I give an example. I read how much we have granted in loans under our Creative Industry Financial Initiative, which is primarily for the youth. Almost close to about 3.5 billion naira has been disbursed. Our AXMIS fund, right, is substantially being disbursed to people in this age. But I would imagine that AXMIS fund, where we have disbursed almost close to about 150 billion naira, has been disbursed to nothing less than 60% of the people in this bracket. 3, only recently, like I said, the president gave approval for the repositioning, rebuilding, and renewal of National Arts Theatre. Aside from renewing and repositioning National Arts Theatre, 4 economic hubs are to be built around the National Arts Theatre for movie, for music, for fashion design, and for ICT software development. These projects, which will be a total urban renewal for Lagos, and after being completed, will go to another one will be established somewhere in the north, another one in the southeast, south area, is going to be costing the bankers committee, not the government, not the CBN, over 40 billion naira. And this is meant to help stimulate the entrepreneurial skills of our youth, improve the tourism capacity of our country.
On the 25th May 2021, at the 279 Monetary Policy Committee meeting, the Committee of the Central Bank of Nigeria voted to retain the monetary policy rate at 11.50%. CBN Governor Emefiele, while reading the communique at the end of the MPC meeting, said the committee chose to retain all parameters in order to continue its pursuit of supporting the economic recovery. The MPC noted that the economic growth could be hampered in an environment of unstable prices, leaving the available options to loosening the stance of the policy, tightening or maintaining the status quo. The committee also noted that an expansionary stance of policy could transmit to reduced pricing of the loan portfolios of deposit money banks and result, therefore, in cheaper credit to the real sector of the economy. It, however, noted that this expected transmission may be constrained by persisting security challenges and infrastructural deficits. On the other hand, while a constructionary stance will only address the monetary policy component of price development, supply-side constraints such as the security crisis and infrastructural deficits can be addressed outside the purview of the central bank. Although the economy had successfully exited the recession, the recovery was very fragile given that the GDP growth of 0.51 was still far below the population growth rate. The committee therefore said that there is a need for the monetary authorities to consolidate on all administrative measures taken not only to rein in inflation but also on the actions so far taken to grow output. It also recognized that measures put in place to stimulate output growth through the use of its intervention facilities to inject liquidity into employment, generating and output stimulating initiatives, targeted credit facilities, and agribusiness small and medium enterprises investment scheme had started to yield results.
Yes, we've been to Niger, we've been to Kebbi, we've been to Katsina to launch our pyramids and the 2021 planting season. We were at Ekiti last week. Sometime this week I will also be even in Rivers State to launch one of our agricultural plants, which is one of the biggest starch processing plants in Nigeria. And what does that mean? That instead of multinationals like Nestle coming to central bank to say that they need foreign exchange to import starch, or to import starch and maybe sorbitol and the rest of them, that this company in Port Harcourt or somewhere in Bayelsa in different parts of the country can also process cassava into starch, which the likes of Nestle can buy, and so that will help us to reduce the import drive for people to begin to say they want to import starch or sorbitol into the country. So it is for, I use the word, our own selfish purpose that we are doing that, because we want to see to how we can produce and consume what we produce in Nigeria rather than importing them, when we know that we can create employment and boost output. As long as we find that what we are doing is yielding results, particularly boosting consumption, expenditure, and investments, we will continue to do so. And that is the reason monetary policy has given us the mandate to say, look, instead of plateauing at 300 billion, move further to 400 billion and support our households and SMEs for them to really begin to do business. Somebody wants a loan of 500,000 naira and he goes to the bank, can't get the loan. We'll make this available for them. And we have received positive testimonials about how this has helped and impacted positively on life. In fact, we're going to begin to run a TV documentary to show those who have benefited from it and how it is helping them to create jobs for them and also create jobs for other people. So we'll continue to do any of these things because we believe that it will help our economy to grow and everybody will be happy and jobs will be created and the level of insecurity can reduce.
Meanwhile, the Monetary Policy Committee meeting of the Central Bank of Nigeria at its last committee meeting held in July voted to retain the monetary policy rate at 11.5%, the asymmetric corridor of plus 100 and negative 700 basis points around the MPR. The CRR was retained at 27.5%, while the liquidity ratio was also kept at 30%.
The committee thus decided by a unanimous vote to retain monetary policy rate at 11.5%. In summary, MPC voted to 1. Retain MPR at 11.5%, 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the MPR, 3. Retain the CRR at 27.5%, and 4. Retain the liquidity ratio at 30%.
The committee expressed confidence that the bank are doing the right thing in managing the country's economic situation by increasing access to credit to the real sector of the economy. The MPC expressed delight that inflation had begun to trend downwards while output growth had remained positive. The committee was of the opinion that there was a need to continue to put in place policy measures that will further and faster drive down inflation, while at the same time accelerate output growth to levels above the population growth rate. Governor Emefiele highlighted that the committee encouraged the bank to continue the use of its intervention mechanism to deploy funds to output-stimulating and employment-generating sectors of the economy, such as the targeted credit facilities, the HMEs, agriculture and manufacturing. The Monetary Policy Committee meeting made the decision to hold all policy parameters constant, with the expectation that all stands will enable the continued permission of current policy measures in supporting the recorded growth, recovery and macroeconomic stability. As the Monetary Policy Committee of the Central Bank of Nigeria prepares for its September 2021 meeting, the bank has reiterated that its digital currency, e-Naira, scheduled to be unveiled in the last quarter of 2021, will enhance the effectiveness of its monetary policies. Emmanuel Audu reporting for Moneyline with Nancy.